we are joined by a very special guest, Tendler, who authored The Mental Game of Trading.
Spent 2 years getting a master's degree in counseling psychology, 2 years getting licensed as a therapist. That foundation gave me the ability to deep problem-solving skill.
Would you say that in all your experience in working with different traders are always looking for that holy grail technical strategy that's going to help them to master the market, or one day it's going to just click their fingers and they can read the market like a book? How often has that actually been the case?
Probably 20 to 30% if I were to guess. Are you sure that the reason you're not profitable is because you don't suck? Or is it because you actually do have a viable strategy that your emotions are blocking you from being able to execute consistently and properly? But again, we're still kind of trusting at that point that they're correct. It's easy to blame your emotional reactions also. There's also an ethic and an ethos in trading it's all psychology. And that is absolute garbage and I think harmful. Without fail, this has been the single easiest way to make progress immediately. You can begin to actually
Number one podcast in the trading space, the fastest growing, and that's thanks to every single one of you. Welcome everyone back to the Words of Rizdom podcast. We're back once again. We're still here in Miami and we're still the number one trading podcast in the world and the fastest growing thanks to all of you and our incredible guests. Talking of which, we are joined by a very special guest, Tendler, who authored The Mental Game of Trading. Jared, thank you for being here today.
Riz, thanks for having me.
It's my absolute pleasure. I know obviously you traveled here just for this, which is always an honor. I hope the travel was smooth.
I mean, for airline travel these days, as smooth as it could be.
That's true. It's very true. Let's go straight into it. The Mental Game of Trading. What was the inspiration behind writing that?
So 2011, I wrote The Mental Game of Poker. And a couple of years after that, I started hearing from traders who said, look, if you change the word poker to trading, you basically have a whole nother book or a whole other audience. And that's not exactly my style. Like, I want to really kind of dive deep into an area of competency that I'm not necessarily an expert in, right? I'm not a trader. My expertise was in golf, right? I wanted to be a professional golfer. That's what kind of drove me to this field. But then I randomly met a poker player. And actually on the golf course, and that what brought me into poker. And I spent several years like really diving deep into the world of professional poker before I wrote that book. So, traders start picking up the book. I start picking up new clients, start working with institutional firms, going on site, working with 40 traders over 2-3 days, just kind of fly in, fly out. I really started to learn the nuances of trading, learned obviously the differences that there are between trading and poker. And, kind of cultivated a robust understanding of the problems that traders face, understanding how they view those problems, and I say that in a very particular way because how they view them is not always accurate, right? And I'm sure we'll get to that today, but the ways in which traders think about their problems is actually one of the biggest problems out there. And so I want to kind of understand that fully, and spent about 4 years actually writing the book before it came out, 2021.
Wow, and the impact it's had has been incredible. I was literally just saying to you that the amount of traders who have mentioned your book and shared how it's helped them on the podcast alone, obviously all the people out there, has been absolutely incredible. And how does it feel, just before we get into everything, how does it feel to have that impact and to see that vocalized?
Yeah, obviously it's incredibly gratifying. I mean, you spend that much time doing anything, you want to have an impact. And I think for me, I kind of wanted me when I was trying to be a professional golfer. So to be able to have that kind of impact on a wide variety of traders, most of whom I've never met, is incredible. And certainly it motivates me to want to keep working hard and coming up with new content, which I'm doing regularly. And it's all you could ask for as an author, really.
Definitely, no, yeah. I can only imagine. And before we go into it as well, there's an interesting thing with the trading space I found is that you have a lot of content creators, etc. But you find a lot of content creators who say they're mindset coaches, they're psychology coaches, but they've never actually studied psychology, for example. What are your thoughts on that as someone who has?
I think like anything, you kind of get not what you pay for, right? But you get kind of what you put into it. And it's very easy, and there's lots of, I've seen it in poker, I've seen it in golf. Every industry kind of has people, especially nowadays, trading included, who kind of purport themselves to be mindset coaches, and they have probably worked through a bunch of issues themselves. They've had some education. But to me, we're talking about solving fundamental problems. And I think to do that well, you have to have education, you have to have training. I'm obviously biased because I spent the time doing that, right? I in college recognized that my path to professional golf was kind of being derailed by my own mental hangups. And, diving into golf psychology and sports psychology kind of worked to a point, but never actually solved my problems, right? I was trying to qualify for the US Open. I'm actually going to be doing that again soon.
Okay.
And yeah, this is not college golf, right? I was a 3-time All-American in college, won 9 tournaments. I could perform under pressure, but being on the verge of trying to get through, there's 2 stages of qualifying for the US Open. On the verge of being able to do that, I missed a bunch of putts from this length, right? Playing phenomenally and missed a playoff by a shot. So when I found myself under the hot seat, that is when all of your weaknesses get exposed. And so a lot of the content that exists out there might be helpful in terms of advice. And I would kind of describe it as like a stock picking in a sense. This isn't a robust system. These aren't deep strategies, which every trader needs to have. Whether you're swing trader, long-term investor, like you have to have strategies and systems with how you operate. Otherwise, there's no real way to test and validate that what you're seeing is actually real. In the mindset space, in the mental game space, the placebo effect is very powerful, right? I can get you to improve in ways that have no legitimacy long-term, right? Just by getting you to be distracted or by focusing on something else. And one of my golf instructors years ago gave a great, kind of corollary to this. He and another highly skilled instructor took a random group of golfers, and over a 12-week period, they said, okay, let's see whose system works better. The instructor that I worked with only had his golfers focus on the word blue in their backswing for 12 straight weeks. The other instructor went through all of their, kind of usual growth. And of course, the group that focused on the word blue made more improvements. Why? Because it was a bit of a placebo. We got you to, get out of your head and focus on something that, was not a bunch of other random things, which, a lot of traders end up doing. They fill their minds full of lots of content. So the point is to really solve the FOMO, the greed, the revenge trading, the overconfidence, you have to have a deep understanding of what's causing it. Otherwise, your solutions are going to be random, and they may not hold up under the bright lights of the intense pressure that is the live market, right? Traders going from the sim to the live market. Why is that so hard? Because all of the weaknesses get exposed there, right? And now it matters. There's consequence. So I know kind of a bit of a long-winded answer, but for me, having spent 2 years getting a master's degree in counseling psychology, 2 years getting licensed as a therapist, doing work I did not want to do. I was working in the Boston area social service system, working with kids and families who were, having major issues. There's nothing I see in trading that even comes close to it. It was certainly trial by fire in a sense. But like that foundation gave me the ability to have a deep problem-solving skill. And, for the last, now 18, 19 years of coaching, right, that is my greatest asset to kind of what I bring to the table here.
100%. The reason I asked you that is literally just to give people real insight into the level of work you've actually done, and the level of time it takes to really get to that level as well, versus some people out there who say they're a psychology coach or whatever it may be, but really haven't put in that effort. So I wanted just to show that difference,
Thank you.
It has to be done. And like you said, like that amount of time.
And it's a lot like traders, right? I mean, you've got to, I see, right, you see plenty of YouTube channels of guys that have, for 1 or 2, 3 years have been trading and made a bunch of money. And now all of a sudden they're becoming coaches. Like, it is so hard to educate other people to be able to take your content, to take what you're doing and have it apply to lots of other people is very difficult. And in the mindset space, it's very dangerous, because if you're trying to see others through the lens with which you experienced, it is like bringing bias into the market. And we know how problematic that is. So when I see a client, it's the exact opposite. I'm like a trader who is trying to, as best as possible, absorb what is coming to me and understand things that they can't see, right? Find that the edge in my mind is the opportunities that they're not aware of, right? The kind of blind spots, because I'm seeing them for who they are, what they're struggling with, not creating bias that's coming from me because I experienced, fear. It's like, well, I can solve a wide range of problems, not just because of my experience, but because my experience in training has forced me to see people for who they are, not for how I want them to be.
I love that. And what's interesting is your transition from playing golf to obviously the poker side of things then into trading, because from my understanding, and there was a golfer I met actually who was getting into trading, and they were saying that there was a lot of similarities due to the fact that, in terms of emotions, like if you get emotional when trying to play golf, I don't know too much about golf, but if you get emotional, it can really affect your game. And being able to be calm in that chaos and under that pressure, as you mentioned earlier, is so important. So has it been quite a natural progression for you to go into that trading field?
It was remarkable. I mean, the poker player that I first worked with, because he had an experience in golf, was able to kind of translate the worlds across. And then you understand poker deeply, as I did, and I've worked with some of the best poker players in the world, guys that have won bracelets and millions of dollars in big tournaments. It was a natural transition then into trading as well. But there's always still a community aspect. There's a language. There's unique problems. Trading is very different than poker. As much as we can say that the variance that's involved is as high in these two fields as in any, I think sports betting or punting, horse racing would be some of the others. But golf is probably the sport that has some of the more higher variance with regards to some of the more established sports. So yeah, I mean, every golfer's getting bad breaks, and it is kind of how you deal with that. And some of the best golfers in the world are the ones that have kind of been able to master that. The best poker players in the world are the ones that are able to create a more independent mind in being able to kind of deal with the short term. Same with traders as well. That's what I think the greatest demand mentally is, because most traders are coming from other professions, other walks of life where they were successful, or they're in a kind of a standard corporate job. But it's like, you don't really understand what it's like to be the casino and how hard it is to develop a table game like blackjack. Like, that's what you're effectively doing. Trying to tilt the odds, even just 2% in your favor is enough to make millions of dollars. But that's incredibly difficult to do when it means that you're going to have a lot of losing of it, as you know very well. But golfers, I think in general, don't fully understand how impactful variance is. And I won't go too deep into it now, but there's a lot of interesting kind of data that's come out in the last 8 to 10 years within golf that's kind of actually made it a little bit more like probabilistically understandable in like an EV kind of way, which has been kind of fun to sort of see. But golfers in general still they don't get the way in which their edge is going to play out over series of tournaments, because the life cycle there can be incredibly difficult. Some of the early online poker players that I was working with, they were playing 13 to 16 tables at one time, effectively 1,000 hands per hour. And in my mind, that was kind of like playing a 72-hole golf tournament like in one day, 5 daof week. I mean, the life cycles, the cycles that you go through are incredibly condensed in poker. And for a lot of traders that are that way as well, golf, kind of gets extended out quite a bit, and the feedback loops get harder to reconcile. It requires a lot more preparation and development, in your off time. But traders, they need to be incredibly well prepared so that they're making improvements while they are trading. Because if you don't do that, then the cycles are going to kind of work against you very rapidly.
No, definitely. And before we really get into it, the last question I have for you, as you probably know, one of the famous authors in the trading game is Trading in the Zone. And that's like put up there on quite a pedestal in terms of trading psychology. And yes, it has some helpful gems in there, but a big takeaway really from that book is just think in terms of probabilities. But it doesn't really break it down into like actionable steps or address a lot of other issues, which I find interesting. So, what are your thoughts about trading in the zone or thinking in probabilities? Is it something that, yes, is helpful, but there's a lot more detail and depth to go into beyond that? Let's take a break for a minute there, guys, because I want to tell you about one of our sponsors, Alpha Capital. Now, without our sponsors, it's not possible for us to host such incredible podcasts around the world and get the level of guests that we are getting. So again, thanks to Alpha Capital for sponsoring the podcast. Now, Alpha Capital is one of the best prop firms in the industry. So far, this year alone, they have done over $50 million in payouts, which is absolutely incredible. They have the very best infrastructure in place for longevity from an in-house broker, so they can offer the very best trading conditions and platforms that all traders love to use. They're still able to offer services to the US as well, so the US traders can still trade with them on particular platforms. They have institutional experience, so they know how to manage a prop firm correctly and have such an incredible team on hand. On top of which, they have both a pro and swing plan. So depending on your style and strategy, you can choose which one is best for you. Now you can use and get the highest discount available at anywhere using Riz25. So that's RIZ25 for 25% off all challenges. The link's in the description below. So let's get back to the episode.
I've always said that trading in the zone and my book are kind of like nice, a nice pair. Trading in the zone, I think if you're a new trader, have no experience or understanding even in poker or betting or what, it's good to kind of, as a nice primer to begin to understand like what is this world, because it is different from anything else. That book was kind of like the golf is not a game of perfect. Bob Rotella was, kind of the pinnacle of golf psychology. There are poker books, kind of prior to mine that came out. Same category. There's full of great advice, good perspective, philosophy. There's depth and understanding there. But what it lacks is, a lot of people still have a hard time accepting probabilities. Okay, so you can know them. And if you have a harder time accepting those probabilities, that's a different problem-solving task. And that's where kind of my book picks up. It's like, look, if you understand all of this, and yet you're still FOMOing into trades, you shouldn't. You're still violating your rules and all the other, many problems that traders have experienced. That's kind of where my book picks up. And yeah, that's kind of the basis of me developing that system to help traders do that.
Definitely. I think we can go straight into it now in terms of if let's look at and discuss different topics or different psychological issues that traders face. And one of the big ones I know that I faced personally was greed. Even to this day, to be fair, like greed tries to seep in, as you can imagine. But it was a big one for a long time of constantly trying to make it big every single trade, every single month. When there was no signs of consistency, right? I was just focused a lot on making big money. So what sort of insights can you give to traders who are experiencing that greed or continue to experience that?
The first question I would ask them and ask you would be why, right? Why do you think that pressure was so intense? Why do you think that, and we can talk about it, now if you want, or just generally speaking, it's the why questions that are really critical, because if you don't understand the causality, you can't create a strategy that's reliable, because greed, when you really break it down, is not a problem, right? There's an excessiveness that has been created. You are driven to achieve your goals. In trading, money is the metric by which those goals are achieved. No one would ever say that a Tiger Woods or a Jack Nicklaus or Scotty Scheffler were greedy because of how much they wanted to win. That's an insane comment. And so we look at every arena in sports, we look at every arena in business for the most part, and we say, where is the line between ambition and now greed, which I would just firmly define as like now your efforts to achieve your ambitions are now working against you. Mm-hmm. So you take the baseball player or the football player who, just kind of gets a little greedy and tries to do too much within the game. Like the same line exists, but it's for you, or for you, the individual trader, to define for yourselves. I can't do that. And so the question is like, where are those violations of your rules, your strategy happening? And then if you say, okay, well, it's happening because I want to achieve my goals today, right? And there's just this insane urgency to do that. And so when I see an opportunity to maybe take my target off and see if I can squeeze out, another 10, 15, maybe even another 100% return, like I'm going to do that without fail. And so what is the flaw, right? That's where we have to start really peeling back the layers, because the greed is a symptom. It doesn't matter what emotional issue we're talking about. The greed that becomes excessive is a symptom of an underlying flaw, bias, wish, illusion, hope, faulty perspectives, right? These are the real problem at the root of what is producing that emotional reaction that causes you to do something that you know better than, right? You know at the start of every day that you should not do this, and yet you are compelled to in that moment. So when we peel back those layers and kind of understand the whys, well, sometimes it is, maybe in your case or before, this illusion that it was possible for you to have your goals achieved instantaneously. And when we say it out loud, it's like, oh, obviously that's absurd, and yet deep down we believe it. And so, maybe kind of spoiler alert for any kids that are around, right? This is like the adult equivalent of believing in Santa Claus. So these things kind of hang around in the back of our minds sometimes. And again, that's one example. But sometimes another example might be desire for perfection. I mean, I can't tell you how many perfectionists and people with high expectations come into trading. And it's a volatile combination, right? Perfectionism, high expectations, phenomenal for motivation, but it comes at a cost. And greed, right, might be coming out because here you are trying to kind of maximize, get the absolute max return for this trade. Because if you don't, you are going to be pissed off at yourself in kind of that hindsight way, knowing, I could have squeezed out more. And now all of a sudden you're going to now revenge trade and make additional mistakes. So the greed is actually almost protecting you from that chaos. So, again, kind of peeling back the layers from some of the underlying causalities.
No, definitely. So if you take a personal example, then mine was like twofold. One was I'd lost so much already, so the greed would there be like, I need to sort of unwrite that, like write that off. I need to get rid of that loss. So, if I was starting to have some green days or green weeks even, or maybe a month, then my mindset would be like, oh, if I keep this up, I'm going to get rid of those losses I've made over the last, say, year, 2 years. It's finally time. And the other one would be a case of rushing to get the dreams, if you will, but less so in terms of, okay, I need to do it now, like literally on this trade, but more so like, again, those thoughts would be quite dominant, and then it would lead to going off plan, over risking, over trading, whatever it may be, and then that cycle would go over and over again.
Yeah, that's an incredibly common, what I would call like kind of reaching it, and golfers have it, poker players have it. It's just the reason that it's flawed is because you're not thinking beyond. And so there's like a little bit of a lottery winner's mindset in here, where you sort of think that this windfall is going to somehow transform you in ways that it will functionally not. If I were to tell you, kind of a bit of a question here, who is happier 1 year later? The person that wins the lottery or the person that loses the use of their legs in a tragic accident? And the answer is, it's a trick question. It's the person who was happier before that event occurred. So the point is that, generally speaking, there's going to be a deviation, right? Somebody's going to be elated, somebody's going to be, really in despair. But then you're going to kind of regress back to your own mean, which is back to your normal beforehand. So you sort of finally making it is not going to transform you in the way you are. You're going to go back to sort of your default mode very, very rapidly at best. At worst, you're going to become complacent, because now you feel like you kind of finished the race, right? Race is over. I made it. And then complacency sets in. You sort of subtly believe that there's going to be, that you are now like a money printing machine and all of your problems are solved. And that illusion, right, is very, very costly for a lot of people.
Definitely. No, definitely. And would you say that there's an issue with traders, and maybe generally in a lot of people just generally walking in life, but especially with traders, that they assume there's going to be a moment where then happiness is absolute, just constant. And like there's always going to be just a dopamine hit after dopamine hit, versus, yes, you get a good feeling when you've achieved something, but then as you said, you go back to the mean, like you go back to just kind of normal life.
Yeah, it's really hard to create structural changes. And it takes way longer than most people think. It's not the 30 days to build a new habit, right? It's 30 days to establish something in your mind. To really create some mastery where you've permanently upgraded the way that you operate, it can take years, depending on how much you have to kind of work through, how many little error codes, flaws, right? Things that are kind of in the background, seducing you, right? For me, in the last year, I've really worked incredibly hard on my fitness and my diet. And I've never, been awful, but it was like enough where I'm now trying to play high level golf again. And, my diet was just like undercutting the work that I was doing, in the gym. And, I'd have a couple good weeks, and then all of a sudden, well, of course I can have, a little bit of a snack here, and then, go off the rails. It very much is like traders who have, 2 great weeks and then fall completely off the rails. It's kind of those boom and bust cycles. So to truly kind of move your base of operating upwards, for me, it took almost 18 months. Now, I was working through a bunch of different things. It wasn't like my job, right? So as a trader, we assume it could happen faster, but it's not going to happen in a month. At best, usually we're talking 6 to 9 months, which is way longer than most people think. We would talk about like New Year's resolutions. Same general idea, right? There's a surge of inspiration, and that inspiration carries you as far as it does. And when it starts to fade, you will be tested. And that's when all your weaknesses and flaws will come out and have an opportunity to seduce you, just like, a nice juicy trade was going to seduce you to try to move that target. And will you be ready to make a correction? And that's why I say it's so vital for traders to be well prepared with their mental game strategy before they get into the market, right? It's easy to kind of create that game plan for what you're going to do, with positions or in the market that day. But the mental game strategy is really, really critical to being able to execute that. And when those moments come, if you are not ready and you make the same mistake, you have just become better at making that mistake, right? There's no neutrality in learning. You're either getting better at the things you want to get better at, or you're getting better at the things that you don't. So people with, risk aversion, procrastination, FOMO, right? Every time you succumb to that problem, it is becoming stronger. Now we hope, right, that by experiencing it more, you can learn more about it. Your knowledge about the problem, the situations where it's occurring, the thoughts that come to your mind, the emotions that you experience, becomes richer so that you can then create a better game plan. But most traders are kind of waking up like, today is a new day. I'm not going to do what I did yesterday. I know better than that. But you become like the doctor who smokes cigarettes. Well, knowledge is not your problem. Now you actually have to create a game plan and really do the work to put it in and do it for a sustained period of time.
What would you say in terms of traders who, let's say, are alone? They don't have a psychology coach or anything like that. What sort of steps could they take by themselves, or what sort of quality questions can they ask themselves to be able to make some progress and try and undo some of this work or this negative work that they've been doing?
Easiest thing to do is what I've created as a worksheet called a data collection worksheet. It's freely available on my website, but it's not a very complicated thing, right? But the idea is that every single time during the live market, or even at times where you may be doing research and back testing or working on your strategy and having some emotional reactions, you can start writing down the situation, the thoughts that come to mind, the emotions that you experience. Are there certain actions that you take, whether they be avoidant or maybe a little kind of hand tapping? If it's anger, maybe you're pounding the desk, or are there physical signs like kind of heat in your head or tension in your hand, or breathe? Maybe your breathing gets constricted. And then we also want to look at some of the changes in your decision-making process, changes in your perception of the market. Then this, of course, obviously the specific mistakes that you might make at that time, right? We want to really capture the data that comes before the mistakes. It's, hindsight is easy. We want to create foresight. So to create foresight, just start to become aware of the patterning that exists within your own mental, emotional, physical state while you're trading. And when it's deviating from what is optimal, it's worth writing down. And without fail, this has been the single easiest way to make progress immediately. I didn't say solution, right? Progress. You can begin to actually separate yourself from those emotional reactions by writing it down. So often, we're experiencing a lot of this kind of in our mind, and there begins to be a bit of a battle there. And that battle, I think, is harder when it stays there. But as soon as you get it out of your head and write it down on paper, or if you want to put it on your computer, that's fine too, you change the nature of that interaction, right? Now you're kind of not lost in your own mind. You're actually having a bit of a dialogue with yourself. when you write something down, you're getting feedback. There's some kind of unreal quality about the way our minds work. I mean, I know it because I'll have a joke in my mind that I think will be funny, and then as soon as I say it, it's obviously was awful. My daughter can attest to that. So there's just like a reality testing that happens when you have to say something out loud or write something down. And speaking is obviously a good way of also. I have plenty of clients who they've got OBS or they've got some recording software, and whenever they've got something kind of on their mind, they'll click record and start talking. Or they'll just have it going the entire trading session as a way of just having a narrative. They might talk out literally every aspect of their decision or what's going on in the moment. And it gives them a chance to kind of go back like an athlete and kind of rewind the tape and see what happened, to build that recognition and that causality that we're eventually looking for.
Definitely. So would you say by writing it out, you're simply then, rather than having the battle internally, it's more you're observing the battle? And then from observing it, then it's much easier to address that, or at least look deeper into it.
I think so. A way I've described it to a lot of clients is like sometimes it feels like you're out in the middle of the ocean and your head is underwater, right? You can't breathe. What you're experiencing is almost suffocating. And by getting it out, it's almost like you just kind of get your head above water and you can breathe and you can kind of see, oh, okay, well, there's dry land over that way. And you just have a chance to kind of reorient yourself. When you're stuck, and I say that purposely because that's how it feels a lot of times. You feel stuck, unable to translate what you should be doing into the actions that will follow that. I've had clients who literally, had one hand on the other hand trying to prevent them from entering a trade, like literally fighting with themselves. And when there's that level of intensity, it's very, very difficult to kind of pull yourself out. So again, we catch kind of the early rise of that, the tide of emotion, and then you have still, enough kind of mental bandwidth to be able to address it.
Definitely. I want to, it kind of gave me an idea there. In terms of like an example or a case study, are you able to give like maybe one or two case studies from clients you've worked with, the issue they had, and then the work you did with them to the result, if that makes sense?
Sure. I guess, are there any particular topics that you're most interested in? Because I've got.
I can imagine. Any that
yeah.
stands out to you, or anything that stands out to you that is a reoccurring theme within traders, like a very common theme. Because obviously we want to be able to give as much impact to the traders out there. So it's probably best it's something that's very common.
So I'd say this is very common for newer traders.
Okay.
Let's take a break for a minute there, guys, because I want to tell you about the best trading tool on the market, TradeZeller. The reason why TradeZeller is the #1 trading tool that every trader needs is because you can do backtesting, automated journaling, trade replay, in-depth analytics, and so much more. And the greatest part about TradeZeller is that it's all automated. All you have to do is connect your MT4 and MT5. It will pull all your data onto the dashboard. You can add playbooks. You can just add notes. You can add images from your trades, and you can get the insights that is necessary for you to progress as a trader. Now, TradeZeller is for absolutely everyone. Whether you're a crypto trader, whether you're a Forex trader, whether you trade prop firms, it is for absolutely everyone. And that is why thousands of traders have signed up using my link here through the podcast. Make sure you use the code RIZ10 for 10% off your monthly subscription, or WOR for 20% off your yearly subscription. The link is in the description below. And let's get back to the episode.
Especially those that are, maybe in a prop firm challenge, trying to, pass a combine and get funded. Or really anybody that's, kind of working with small accounts, even if they're not, being funded by somebody else. The efforts. Okay, so here is the kind of classic scenario where a couple losses lead to a drawdown, lead to the point where it's like, F it. I'm just going to, aim for a home run here. And if I have to reset the account, buy a new one, then I'll do it. And I think the reason it's so common is because traders, by and large, are looking for the result much more than they're looking to develop the skill. So when you say F it, you're saying, I want P&L. I don't care how I get it. And that's a dangerous combination, because if you do get it, are you going to be able to keep it? And we know what happens to lottery winners, and it's the same thing that happens to traders, right? If you don't have the skill to continue to make well-reasoned, sound decisions based on your strategy going forward, you're going to be in great difficulty. So, yeah, I think this solution is actually easy to understand in theory, but then the work behind it can be incredibly difficult, which is you have to grind it out. You have to delete that option to say F it and like recover that account. And there's been a number of clients that I've worked with, actually really in the last year or so, who have been able to not just get funded, but then actually be able to get payouts and continue to be successful thereafter, because sometimes there are some technical weaknesses that exist too. But from a mental and emotional standpoint, kind of looking for that instant gratification of passing is almost a way of building confidence the wrong way, right? You want your confidence to be based on your competency and your skill in trading, and to kind of get the validation through P&L is a bit backwards. So, how did they do it? Like in kind of very granular terms, it's painful. It's like there was greater awareness on what they should do, and they still, blew up a few more times. But every time they blew up, we and they would spend more time analyzing what happened, what led to it. And a lot of times, it was a bit of more added pressure, right, to kind of want to make money quicker, to feeling like they were getting a bit close. Other times it was they have just been kind of brainwashed in a sense into thinking that that was the way. So begin to kind of bring in a new strategy and tactic in those moments. So it wasn't applied at the moment where they would say F it. It was applied, kind of several trades before that, or sometimes even several days before that. Constant drumbeat of reminding, okay, if these trades go sideways, and of course that probability is there, here is how I'm going to react, right? I'm going to grind this out. I want to earn this the right way. I want to finish this race on my own terms, not kind of cheating my way there. And it was just this constant kind of reframing, right? Some people might call these mantras. I don't care what you call it. The idea is that you have these underlying flaws, this flawed view, and you need to correct it, right? And the correction is not a singular moment. I think that's one of the big misconceptions. Like, oh, okay, now I get it. Well, okay, if I woke you up at 3:30 in the morning, are you going to get it? Like, could you repeat it? Could you do it in the heat of the moment? And the answer is no. Well, then you don't really understand it deeply enough to have it make an impact. So it's the constant repetition. And then it took, another 2, 3, 4 months before they were able to really reliably be able to do it, right? Sometimes there would be make a few trades that were correct, but then, those would lose, and I was like, okay, then I still would say F it. So that the other kind of general big problem that I see out there is FOMO. And I'll give one example from the book because I think it's a very important one, and then another kind of generally speaking. So sometimes FOMO is more of a technical problem. The ability to feel like you're not missing out on opportunity can come when you're actually kind of sensing that there's not as much precision in your execution as you'd want. And a client of mine, first couple of sessions, we were kind of treating this as like a general kind of mental game problem. But by session number 3, he started to actually realize, having paid attention to the types of setups that were producing a lot of FOMO, that there actually was something quite glaring technically. So when you don't have technical precision, or there's a gap or a weakness in your strategy or system, your emotions are going to be heightened for that fact. It doesn't mean that they're going to go away entirely when you have that structure, but they certainly can become a lot worse. And so his FOMO was basically cured instantly once he actually fixed the technical leak in his game. For others, this sort of fear of missing out really wasn't about fear per se. It was this expectation of perfection. At other times, it was really more about the hatred of losing. And when I miss out on opportunities and other traders are capitalizing it, right, I get pissed off. So, how do we work on that? Same deal, right? It's kind of gathering up those details and applying it very early and aggressively, kind of getting that drumbeat of a mantra, or as I call it, injecting logic into that moment as regularly as possible, so that you have a chance to kind of change your reactions.
Definitely. No, I love that. And one thing you mentioned there, which I thought might be interesting to touch on, is the whole prop firm thing. Because would you say, as someone who's got the vast experience that you have, once prop firm stepped in, did that bring a different layer of psychological issues for traders?
It does, because it's not really, it's almost like it kind of changes the game, right? Like it's, now you have to kind of follow these rules, and the rules are, I mean, they're sometimes incredibly intolerant of any kind of missteps. So yeah, I think sometimes the game for that reason changed, and then also like kind of the target, right? Now it became about getting funded versus actually becoming a skilled trader. So yeah, I think that I'm not like I think the prop firm ecosystem has been great for the industry in general and given a lot of people a lot of opportunity, but there's a reason why they're making a ton of money, right? And I think it's, yeah, I have very strong opinions on how kind of the mentality of those should take shape, and you know, it cannot be about just getting funded. It has to be about becoming a skilled trader versus a person who trades and makes money. Those are two vastly different things.
How important is that for a trader in terms of, you know, putting the wrong things on a pedestal, such as you say, just getting funded, just getting passing a challenge, you know, versus actually focusing on the true goal, or what should be the true goal of a trader?
I mean, I think it's everything in a sense. I mean, because that defines everything that you do. You know, the like discipline, work ethic, motivation is all geared towards you know, the outcomes that you're looking to produce. And if the target that you're aiming at is going to be incredibly gambly, right? Because I'm not saying that you cannot be successful with that approach or that mentality. What I am saying is that the odds of you being successful that way are very low relative to adopting what I think we both believe is the right perspective and truly becoming skilled. You de-risk so much of that effort. I mean, I've clients who've been trying to be successful for like 7, 10, 15 years, spinning their wheels. And it's, and in some measure, it's because they kept thinking they were, you know, skilled enough. And they really weren't. They were just after getting either out of their hole or making enough to kind of prove that they could be successful. And it was not. And a lot of times they, more recently, which is why they come to me at this point, it's like they've kind of have realized for like 80% of that time they were focused on the wrong things. Only recently they've developed a strategy. They still feel like they're digging out of this deep hole, which they kind of can't get out of quickly, right? So like all of those losses, not just the losses, but also the lost time, feels insurmountable. And so now they're kind of in a good spot, but they're kind of dealing with a lot of regret and a lot of old pain. But the point is that it's just so common for traders to kind of be doing the wrong things for a long time. And, you know, yes, it would be nice if you could, you know, be successful quickly. It would be nice if I could help you make your mental game, you know, be emotionally balanced, you know, instantaneously. But in large measure, like those things would be way more costly if I actually, you know, kind of had those powers.
Definitely. And one thing I want to ask you is that, as you mentioned there might be traders who've been 8 years, 10 years, 15 years, etc. Let's take just an average figure. Let's say if someone's been trading for 7, 8 years and they haven't been doing it profitably, right? And they've got a lot of mental hang-ups. Have you got any examples of someone you've worked with around that sort of time frame where you've actually helped them to then become profitable? The reason I ask is simply because through the podcast and through my time in the markets, I've spoken to traders, you know, so it's probably similar to yourself. And you know, they tell me about, I've been trading for this long and I haven't made it. Or sometimes it has been 10 years plus. And I would love to hear of, you know, what sort of work you've done with someone to help them change that. Because I think for people to realize it is possible, because I think around those sort of timeframes is when people really start to doubt themselves.
Yeah.
And doubt like if all the work they've been putting in has been worth it. And I think it'd be really good for them to hear of someone or an example of someone who has been in that position but has made the change.
I'll give you an example of somebody who, you know, kind of right now is like kind of at the crux of being able to kind of make it. And it's, you know, had a strategy that was not provided to him, but was basically kind of taught by a mentor, and just for 7 years struggled to implement it. Maybe he got 80% of what this mentor was able to do, because I think a lot of good traders have difficulty being able to properly articulate what it is that they're doing and making all of their decisions. So, yes, I think he was struggling for a while to both understand that strategy, and there was probably some missing pieces that he didn't even know to ask. But the bottom line is he was, down, like $500,000 over a seven-year period. And I think one of the big pieces there that needs to be understood for anybody that's in this position is how many bad habits you have developed, right? As I said earlier, you become really skilled at trading poorly. So first and foremost, a lot of what we're doing is making sure that there's absolute precision with what you're attempting to do. But you need really, really good feedback to know, am I trading properly, yes or no? Binary, just to begin kind of chipping away at those old habits. And then we get to see more acutely what are the emotions that are just screaming out that cause you to violate those rules. Or ideally, you're still able to make the right trades, but also able to capture the anger that is just forcing you to walk away and quit the day prematurely. Just because it's just kind of far too volatile, which is fine, right? Because as long as you're making proper trades, even if there's only 30% of what were the trades out there that day, we're fine with that, right? There's a lot of management. I would say a lot of this could be kind of well framed as like physical rehab, right? Here you are, you've had a knee replacement, right? How long is it going to take you to rehab that injury? And so that's the kind of training that really needs to, and with this client in particular, it's been about 14 months. Okay. And it's only been the last 6 months where I feel like, I wouldn't say we've turned the corner, but like we're turning the corner. So it takes a while. And so absolutely it is possible. And I will say clearly, just that the story is positive, right? Last 4 or 5 months have been consistently profitable, small, right? We're all base hits, nothing overextended. And more powerfully, a lot of the emotion has begun to subside, right? And so, 6-7 months ago, there was still volatility that was causing some failures and some setbacks. Generally was able to contain it and control it well, but those 1 or 2 were enough to just like destroy all the gains that were kind of made P&L wise. And so it was just kind of like these fits and starts, but not losing, right? So it was like, phase of us kind of really figuring out what was going on while still losing, stabilized, not losing anymore, but not gaining, getting a lot more retraining, begin to kind of turning this cruise ship in the right direction, and now suddenly being able to have some steady wins, but like very, very cautiously as we progress here, because overconfidence was one of the problems. And close a big day, and that's dangerous. So we have regular check-ins and making sure that on the very, very narrow path. And so I'm optimistic, but at this point, there's still no guarantees. But yes, it's absolutely possible. But I would strongly, strongly urge, that very well-defined, non-discretionary style for a little while.
Definitely. Would you say, and I'm sure it's hard to answer maybe because everyone is an individual, so each case will be very different, but from your experience and for doing it for so long, is there an average sort of time frame that you've seen, no matter how big or small? Is there an average sort of time frame you've seen in terms of when you work with people and just generally traders making the changes necessary?
I'd say the factors are maybe not necessarily personal, but more about like how long they've been trading and how old they are. So I would say, generally speaking, there's a sweet spot where you get somebody who is younger but has some kind of good experience, kind of elsewhere in life, and relatively self-aware. Within sometimes 2 to 3 sessions, like we can see some transformation. You get somebody older who is very knowledgeable about themselves through other businesses that they've had and other arenas. Same deal. But sometimes that age can be a bit detrimental because there are so many bad habits that have been established, and sometimes they're also kind of related to their philosophy of mental and emotional stuff, which is, we don't talk about it. We just put it away, and I'm not dealing with that stuff. And so beginning to kind of change their perspective is oftentimes kind of the first thing. But you get somebody that's older, like their wisdom and experience sometimes can lead to a rapid transformation, where somebody that's younger, they don't have as much experience they can lean on, especially when we're dealing with confidence issues. Confidence very often can kind of bleed from your personal life. If you don't have confidence there, I'm not saying that it's going to guarantee that your confidence in trading is going to wane, but when you've had a lot of successes elsewhere in life, or even just experience, that can really certainly help to make that transition. Rough time frame, if somebody is going to come work with me, it's going to be anywhere between 2 to 3 sessions to 8 to 10 on average, that we'll see some significant progress. Now, how far and how much has been solved at that point is still kind of TBD. I've had clients that have, like the one I just mentioned, we needed a lot more work, and I've had some who, like within 15 minutes, we kind of got to the root of their issue. They were very self-aware, had already done work in other arenas. It was like they just needed to kind of understand an aspect of what their reactions were that they didn't see before, and they were off the races.
Definitely. And how bad do you think it is for traders where they constantly take breaks? Because that's something I used to do as well, where I would trade, go through that period, basically the greed and then the boom and bust, and then end up being bust. Then take a long break from trading, 2 to 3 months, then come back and do the same thing again, and then just repeat that a good bunch of times, not even a handful, a bunch of times. How dangerous do you think that is to a trader in terms of like their progress and being able to actually address the issue versus kind of running away from it and then just coming back and repeating it?
You said it well. Right? You're not addressing the issue, right? What you're doing is you're reducing all of the emotion that accumulates during that period. Because if there was a leak in this space and we had a bucket, kind of capturing that, we would never say that the solution was emptying the bucket. And that's effectively what you do when you took that break. It's like, no, we have to figure out the source of the problem. So it's perfectly fine and in large measure advantageous to have periods where you're taking breaks, especially if there's that much emotional volatility. But the question is, what are you doing then? And you should be really peering back into understanding what the heck just happened. How did I get to this point? What was the buildup? What was the causality? What's the patterning? As you said, it's like, the good thing about us is that we're not as unique as we think, right? These patterns happen again and again and again, and there's a momentum to them. And the more that you can chart them, map them, see them, you become like skilled in the same way that you are as a trader. Being able to see the patterning in the market, seeing the patterning in yourself is functionally the exact same thing. It's just different stuff. And generally speaking, traders are not as educated in how to do that, which is really the purpose of the book. So breaks are needed. I'd say in general, traders don't take enough breaks, right? They feel like they have to be there. I'm a trader, I must trade. No, you're a performer. You're an athlete. Think of yourself that way. You don't get paid a salary. And so if you're paid based on your execution, well then what is required for you to be at your best more often? And breaks are an essential part of that. But if you're using breaks as a way of managing emotions, well then that's not really a solution. That's just, now something you've got to, another hoops that you have to jump through.
Would you say, in terms of people working with you, this is something I wanted to ask, because I think at the end of the day, people, might not have heard of you before, potentially. I know that's hard to happen in the industry.
I'm sure there's a lot.
Yeah, but let's say they are interested in working with you, or even a psychologist, and hopefully a good psychologist at that.
A trained one.
Yeah, a trained one, exactly. What would you say in terms of advice for someone to make the most of the service? Because like courses, for example, people join all sorts of courses, but they just join them and then they look around a little bit and then they don't really take any action. What would your advice be for people who do take up a psychologist or yourself to actually make the most of it and to see the changes they want to see? Like essentially to help you do your job better? Like totally. What would be your advice to them to actually make the most of it?
I'd say 2 things. One, do your homework. Don't come to the session thinking that I'm going to fix you. Right? That's not how it works. I'm not a magician. Right? So I'm only going to be able to work with what you bring to the table. And if you don't have much, well, then that's going to be your homework. So first session's not going to be that complicated. It's like, all right, well, here are your mistakes. Well, then here's all this information that we now need. Go have at it. Come back when you've got it. Otherwise, what are we doing? You can pay for my time, but I may not allow it because I don't like to be bored, right? And so, yeah, I'm not going to just sit there and do that. So, yeah, do your homework, come prepared. Now, when traders, poker players, whoever come to work with me for the first time, I have them fill out a very detailed questionnaire. And so it does help to kind of tease out more information. And a lot of times, it was one of the coolest things, one of the reasons I did it this way, a lot of times there's clarity that is developed just from writing the questionnaire. Because just like doing the data collection and getting things out of your head, all of a sudden now you get to start to see things. And to me, it's kind of like, how hard would it be to complete a puzzle if, let's say it was a 1,000-piece puzzle, you didn't get to see the picture on the box, and you could only grab 5 pieces at once, right? 7 pieces at once, and then you had to put them back or put some back. That's what our mind is like. Our minds have a limited bandwidth. So when you're trying to kind of connect the dots and figure out what's going on, and it's all up here, it's incredibly hard to do that. The second you start writing things out, it's like being able to take pieces out of the box, put them on the table, and then eventually you get to see what's going on. So when a client for the first time writes out their answer to that questionnaire, they're connecting dots and seeing things they didn't realize, or they're just they start to realize how bad this was and how dumb they were for not addressing it earlier. The other thing is just general openness. It doesn't happen all the time, but there's been a few sessions where clients would basically steamroll the first 30 minutes. And they're there kind of trying to, and the vibe that I get is they're there trying to tell me what they know. Tell me what's happening. Dude, you're here because you don't know. And it sometimes takes a little corralling. I'm not punitive. I kind of try to go in the side door. I don't try to bang down the front door. Try to go in the side door to help them to understand that what they are missing, right? To understand some pieces that they can't see and to begin to become open-minded in a way. But sometimes in this space, it's harder to be open-minded because we're oftentimes fearful of what we'd find. And yes, you might have some skeletons in the closet. There's lots of people for whom that's the case. And, you either can deal with it because it's there, right? It's not going away. Nothing that comes out in a session is like made up, right? These are things that are in the background of your mind affecting you, in some cases, every single day in ways you don't realize. It's kind of like a computer that just has a lot of programs open in the background and, resources are kind of waning. It's like harder to, in this case, like think. Your emotions are far more reactive. Like sometimes that stuff has to get addressed. But that's not always the case. Sometimes it's just a performance-based problem, a trading-based problem, and you want to achieve your goals. It's gonna require you to be open to things that you don't know, and it's okay to not know. Right? There's stuff I don't know. I'm continually learning myself. It can be exciting, and that's not scary, but it might be nerve-wracking, kind of like a trade that you are nervous to get into because of what it could do. Like sometimes you just got to jump off the cliff and get in there. Same thing here. Definitely.
And would you say that in all your experience in working with different traders, how often has it actually been that they need more technical ability? Because a lot of traders are always looking for that holy grail technical strategy that's going to help them to master the market, or one day it's going to just click their fingers and they can read the market like a book. How often has that actually been the case?
That's a good question. I don't know if I have great stats for my client base, but it's probably 20 to 30% if I were to guess. I think for the most part, I kind of try to vet a new inquiry and say, if it sounds a little squirrely, right, you're not profitable yet, like, all right, are you sure that the reason you're not profitable is because you don't suck, right? Or is it because you actually do have a viable strategy that your emotions are blocking you from being able to execute consistently and properly? And but again, we're still kind of trusting at that point that they're correct in assessing that this thing could be viable. Because sometimes it seems that way, right? It's easy to blame your emotional reactions also. And I think there's also an ethic and an ethos or philosophy maybe in trading that is, Like it's all psychology, right? And that is absolute garbage, and I think harmful. So yes, there's a psychological aspect to learning. There's a psychological aspect to understanding yourself and the type of strategies and systems, markets that you are probably best accustomed to, right? There's a lot of variety. It's one of the coolest things about poker and trading. Lots of different ways to kind of play the game. Lots of different places that you can play the game. So there's definitely a self-knowledge that is really helpful in being able to kind of define your fingerprint and find your way within trading. But at the end of the day, right, I've not spent, decades learning how to become a skilled trader. I certainly will trade crypto and a few other things at times, but I understand where my skills are. So I would never think that I could do what my very successful traders could do. There's the gap between us is as massive as the gap between my competency and theirs and the mental game. So you have to have a strategy system that is proven. And if you're not sure, there's lots of good communities out there. Just do your due diligence. Don't just kind of jump, kind of firmly into the next one. Because a lot of times that's coming from a weakness in confidence, right? As you said, you're kind of looking like for the one thing, and it's rarely one thing. You don't want to be a copy trader either, right? You want to really have a fingerprint that is uniquely yours. And that's what, to me, differentiates a skilled trader from somebody who trades, is that they're not just, copying a strategy, a system. They've maybe copied it for a little while to form the foundation of their skill, but then the way in which it evolves is very much a byproduct of their understanding of the markets and what they're interested in and how their mind works.
Earlier, near the beginning, you did mention working with professional traders and firms. Can you give us any sort of insights in the sort of work you would do at that level?
Yeah, it's a different crowd, right? Because what's different about the institutional space versus the retail space is there are gatekeepers, right? You have to get hired. And so when you kind of pass that litmus test, you are I'm going to say minted in a sense, but the degree of emotional volatility that's experienced there is way less. The quality of character, the quality of work ethic, at least in the places that I worked, and which should make sense because somebody's going to hire me, a firm is going to hire me, kind of understands implicitly the value of those sort of traits in a trader. So for the most part, anybody with $1,000, not even right, can call themselves a trader, right? So there's no, like you and I would never say, okay, I want to, start playing football in the, Premier League, right? Not that we could, but to think that we could is absurd. And yet, as a trader, to say, oh, well, I've got $1,000 here, and we go compete in the most competitive marketplace in the world and be successful, that is crazy. So, there's no gatekeepers. You have to be your own boss, your own manager, your own risk analyst, risk manager. Whereas institutionally, they have so much support around them. They've got managers. Sometimes they're working in teams. There's so much around them that it is very much like a team environment. And so my work with them is kind of parsing through the details of trades that they weren't happy with. Occasionally you'll see some of the bigger issues, some bigger fears of failure, some of the newer traders. I've worked with some of the junior traders that have been, kind of going through educational, internal trainings and trying to scale up that way. And so you'll sometimes see some of the bigger stuff there. But for the most part, it is all the same stuff, just really, really small.
Yeah, it's more specific, really focused on a particular trade or particular performance.
Exactly. And I do this with some independent traders who are, been trading for 10, 15, 20 years. They're $1 million traders, where we'll spend an hour talking about one or two trades, really trying to parse through and understand why it was that they, made what seemed like a mistake. And sometimes it's a bit mental, a bit technical, but it's very, very nuanced.
Yeah. You mentioned environment there, which I think is very fascinating because it's something that I've tried to think about before in terms of the professional environment. They have those teams, right? They have the different roles that kind of does take a bit of pressure off the individual trader, for example, because then they have one focus. How important do you think environment is to a trader and their psychology?
It's hard to put a percentage on it, but it's not, of no importance. I think in general, the more you can, if you're trading from home, the more you can kind of have a consistent workspace. I think it's super dangerous when you're trading on your phone, and certainly like if it's between meetings, if you, are trading at work, in like an office environment, you really want to try to create these like little bubbles where you've got some measure of preparation that kind of cues you into what you're looking for on a technical basis, and then also, again, aware and prepared to deal with the mental emotional stuff. So yeah, if you have a consistent workspace, creating an environment that is, very conducive to the reminders and the preparation that you need is I think really, really vital. And especially if you have a door that you can close at the end of the day, because again, the rest is vital. Being able to kind of decompress is important, certainly within the trading day as well, but also kind of how you feel when you walk in, right? To feel, I think, like an athlete that understands that this is go time, right? That this matters, that every second that I'm here, I need to be focused, diligent, prepared, and if something goes a little bit off, kind of ready to deal with it without having any kind of delusion or any kind of illusion that, it's just going to kind of go away. So yeah, environment certainly can help to promote, emotional stability and balance, make things easier. I don't think, like sometimes I'll see traders who will over focus on that to the exclusion of the bigger piece of the puzzle. Like, all right, you're massively tilting, right? Mm-hmm. Like how you structure your environment is not going to make a material difference there, right? So yes, it's definitely an element that can be fine-tuned, much like diet and exercise and overall routine. But I would, it's in general say that those are secondary factors, not the primary ones like mental game and tactics.
No, so like really what we've highlighted so far is that technicals, some people maybe at a certain extent like not have all the technical knowledge, but that's not really too difficult to learn, especially with the amount of resources that are readily available for free as well now.
Right.
But then obviously there are loads of communities, cool. And just don't fall into the trap of jumping around. But then equally, environment, yes, it makes a difference again, but it's not massive and it's not a hard thing really to deal with either. Maybe if you have a job, creating an environment or creating that structure can be a little bit difficult. But again, if you can be aware of it, you can start to focus on that. But really the issues are the psychological, the why you're going on tilt, the greed, the FOMO. And a lot of people, I think, don't address it. I don't know what your experience has been. Obviously, you work with clients, but on a mass, when you look at the sort of community or the industry, do you find that a lot of traders really just aren't addressing their issues at all? They're continuously doing what I did, to be fair, which was just go around in circles and spirals, take the gaps, go back again and do it again, and just seriously not addressing the issues. Because do you feel like, let's say, for example, someone was in my position like that, and then they started to make some money from trading, but they've never really addressed it though. Do you feel like even if it's a few months that they've made some money, the fact that they haven't addressed it really means that eventually it's probably going to go straight back there anyway?
Very likely so. Yeah. I think it's endemic. It's one of those things that you want to just like kind of check a box and say, yes, I've read my book. I mean, I hear a lot on Twitter, elsewhere, of people saying how loved your book, read it 3 times. They rarely say read it and then did the work, right? So I don't want you listening to my book or reading my book on repeat, because there you're just kind of managing things, you're band-aiding things, you're trying to kind of get away with not having to do the work. And again, if we think about this in like physical terms, I can't give, and no book on physical fitness could ever give somebody muscles. I can't give you corrections. I can't give you mental strength. I can't give you patience. You have to earn it. And it's not just a question of having the knowledge. It's a question of doing the work. So yes, I think that piece is where the gap is huge. Trading the Zone sells incredibly well. My book has been doing great. There are other great trading psychology books out there that are selling regularly. But like, is it translating into actual time spent doing the exercises? And that's a hard one, right? For a lot of people, they want things to come easily. So we're dealing with both a societal and also a community-based issue, which is wanting things to come easily. And the reality is that if it doesn't come easily, then it's going to be challenging. For some people, it does come easily, and that's cool. But like the numbers of for whom that is the case is so low that you're basically gambling. I mean, this is like the equivalent of like buying one square for a Super Bowl pool, right? It's like, maybe you have a 3% chance that you're going to hit. It's like, it's absurd. So it's such a small chance that by not doing the work that you're going to get there. So I'd say de-risk the situation and put the work in. And again, that's why my book is designed the way it is, to make it easier, right? It's kind of providing a bit of a workout in a sense, but there's going to be ups and downs with that. And yeah, maybe actually, I don't know if you recall the inchworm concept from the book. It's this idea that there's an inchworm, that kind of moves like this, right? Mm-hmm. For those that don't know the actual insect. And the whole premise is that there's this movement forward that has to be matched by the movement at the back end. And so this is kind of like your A game gets better, but your C game has to get better also. So there will be times where you're going to make some mental game progress, but then you have to make sure that you're continually moving your worst higher. So in this case, the desire to want to do the work is the correction. There will be times where you will have that desire, but then the times when you don't, that is where the biggest opportunity lies. Because even if you, let's say, normally would have just blown off at the end of a bad session, taken the week off, normally you would have done that. If you spend 10 minutes just taking some notes down about what the hell just happened, that is better. That is progress. Again, along the lines of having the interest and diligence on doing the work. So it's those little moments. This is how you can achieve your New Year's resolutions, right? It's not in the times when it's easy. It's in the times when it's hard. And sometimes we get overwhelmed because we think, well, when it's hard, I still have to reach that high standard. It's like, no. Just do a little bit more than what you would normally. Just a little bit more is progress that you can then kind of build on, and it's kind of, in essence, like scale up. Mm-hmm. You can't, like turning nothing into something is transformative. Once you have something, well, then you can just add more of it.
I love that. No, I love that. And one thing I did want to ask you is, in terms of, obviously every trader is different. That's what does make it a little bit difficult. And just trading as a whole, every trader has a different strategy, etc. But has there ever been a sort of common practice amongst the traders that you've worked with, or a common lesson or theme that has really helped them, or you've seen, in terms of like I don't know how to describe it, to be fair, like a common action that you've given them, right? That you've seen that, okay, this one has been quite a common theme and has worked quite well. It's been quite effective, even though they may have been slightly different in their styles or their issues. But this common practice I've given them has actually been quite effective overall.
I mean, it's kind of like at the core of my system, right? The system is designed in ways that match like kind of the rules of how our mind work. So fundamental rule number one is the emotional system has the power to shut down higher brain function, right? So you can't think, you can't plan, you can't make decisions, and you can't control your emotions when your emotions get too high. So we have to catch it early, okay? Rule number two is that bandwidth limitation, and that shrinks when our emotions rise. So if we're going to correct our emotional reactions, we have to catch it early and be prepared with logic that is actually correcting the real problem, right? We're not battling the FOMO, the greed, the revenge. We're battling the causality of it. So the strategy is create a map, catch those signs early, use what I call a mental hand history to dissect your problem. And from there, you can create logic that is like potent and capable of like cutting through the emotional reaction, not just managing it and controlling it, but actually cutting through it. And if you do that again and again and again, eventually the emotion starts to wither and die. It's kind of like killing a weed with like really slow weed killer at its roots, right? And it just starts to wither and die from within. And that's the power of the system. It's All the specifics on the surface, all the various ways in which we think and the issues we experience, that's all secondary. If you're not playing by the rules, it's going to be incredibly difficult for you to really make progress.
A very common theme among trading as a whole, and I've been guilty of saying it as well, to be fair, which is like, discipline, you got to be a disciplined person, right? So you be a disciplined trader, you got to be a disciplined person. And that might help. So like, if people doing cold showers, to embrace hardship, or going to the gym, or dieting, or just doing things that they don't enjoy and trying to build their discipline, is that enough?
I assume you know the answer.
I'd like to think so.
Yeah. I mean, so to really unpack discipline, let's be clear on what it is. Okay, discipline is like the muscle of the mind. So yes, doing those things can absolutely help you to get bigger muscles, but those muscles have to be utilized in a coordinated fashion. So like, while I may be working out far more intensively over the last 18 months, does that mean I'm going to have a better golf swing? Not really. I mean, it helps. It creates the potential, but I have to get in there and practice and make the refinements and figure out how to utilize this new capacity. So there's that, but then like, I like to think about discipline as kind of being like our mind's effort to achieve our goals. So, whether or not you are disciplined or not is like too basic of a question. It's how well are your actions lined up with your goals? And we don't want to be more disciplined than is required to achieve them. Right? You can have small goals, and that's fine. That's what you choose. I don't choose, the aspirations of my clients. But for a lot of traders, they are experiencing an incredible amount of emotional volatility, and that is forcing their hand to make these mistakes that seem like it's a discipline problem. And it's not. You have to first rule out that your violations of, quote, discipline are not being caused by anger, greed, FOMO, confidence issues, before we can define it as firmly within the category of discipline, which I would call, being overly results-oriented, having some issues with focus and distractibility, boredom, procrastination. Those are kind of generally the big ones. And they tend to be where our mind is getting weak, and it needs to be stronger and more focused and more diligent and more prepared and thinking about the right things. And there's a training that needs to occur in that. So yeah, all those other things can create the potential for it, even meditation. Potential, but then you've got to get in there and really refine your mind in the right way, provided that there's not emotional volatility causing you to break down, because otherwise that's kind of like an injury, right? It's an injury to the muscles in a sense. And so you're not able to follow your rules just like a footballer couldn't, run properly because they've got a quad tear, right? So if your emotions are paralyzing you, that is not a discipline problem.
I think it's good for people to know, because you probably heard it a lot. You probably heard people say, like,
all the time,
I'm just struggling with discipline. Or, I'm very disciplined outside of my trading, but why isn't it reflecting into my trading?
Oh, and I'll say the other thing too is trading can bring out emotional volatility in ways that life does not. So you might be incredibly disciplined because you're not dealing with a lot of emotion there. And now all of a sudden that weakness is being exposed here because trading is just that volatile.
Yeah. Another thing in terms of like trading mindset, if you will, is can people work with you in order to help them learn how to adapt to scaling their capital? Does that make sense? So when people may have been used to trading $10,000, but now they're suddenly trading 50,000, but they're really struggling mentally with the new sort of loss sizes, the profit sizes, and just general, managing that size capital. Is that another thing that they can work with you with?
Yeah, absolutely. So there's a certain degree of this which is just conditioning, right? You're just kind of getting used to it, and if you're now trading 10,000, getting used to 50,000 is kind of equal to getting used to a 2,000 when you were previously trading 500. Right? The scaling up can be progressively kind of inoculated and conditioned to. However, that process can be accelerated when you understand kind of what flaws are typically getting exposed there. I would say generally it's rare that it's just pure conditioning, right? Just getting used to it. More often than not, there is some element that the previous mental and emotional issues that you were dealing with at that lower level were present, but with enough time, you were able to kind of work through them without actually working through them, kind of band-aiding all of it. And so, yeah, to me, it's just more efficient to now kind of look under the hood a little bit, analyze what was going on then and probably is going on now as well. So as you're scaling up, one of the biggest things that you're kind of running into now is the vision of the potential that you had from years ago, right? Now suddenly the dreams that you had are closer. Maybe you're on the precipice of actually being able to realize that. And it can be quite scary to feel like you got that close, right? I was, one step from being in the Premier League, one step from being in the NBA, and I couldn't make it, right? That can be incredibly painful. If you were that close, it's almost harder than if you were never able to even get that close, right? So the pressure that you now feel sometimes can be magnified then. That can be different, right? Certainly the utility of the money, the opportunity to make perhaps, kind of transformative wealth for your family and what that can imply. Sometimes, there's a fear of success that can come out too, that I'd say generally is a weakness in confidence. Sometimes people fear who they might become, right? We've all seen wealthy people, I'm not going to name any names, kind of lose a little bit of their marbles, or lots of bad things happen when they are very successful. And so sometimes you're fearing that. Sometimes it could be because, you grew up poor and, now suddenly to feel like you're having this kind of money doesn't feel, there's a bit of kind of imposter syndrome or a bit of difficulty kind of feeling like you're worthy enough to have that much capital. And again, it's not saying that all those problems can be solved, right? It's, again, sometimes a question of just understanding for you, what you really value, what matters to you. Because oftentimes, it's the headlines are the money and how much you're making at that level. But when you really peel back the surface, what do you really care about? So, well, the money represents excellence. The money represents achievement and success, and so that's what matters. And so you can kind of carry those values and make those more kind of front and center and remove a little bit of the focus on the amount of money that you're trading or perhaps making.
Another sort of scenario I'd like to throw at you, and I think this one could be very powerful for traders out there, I'm sure it's probably a very common one that you deal with, is what work would you give to people, or what work do you do with people, should I say, who suffer a very large loss that's holding them back? So whether it's a blown account or just a very significant loss, and it's just really hit their confidence and really just holding them back from making any progress.
So those large losses really kind of loom large a lot of times because there's a lack of understanding of really what caused it. Okay. So if you've suffered a large loss, it's hard to muster the motivation to want to kind of climb up again, knowing that you're kind of on shaky ground and that could happen again easily, because if you don't know what happened, it's like being in a dark room at your house and all of a sudden getting punched in the face. Like what just happened? And then you're going to do anything you can to kind of avoid that until it doesn't happen for a while and you kind of forget about it and then it happens again. So, you want to do the forensics. You want to really analyze what was going on prior to that large loss. And without fail, overconfidence is the sneaky, kind of conspirator here. Very much under the radar. It's subtle. Just having excessive conviction, to me, can be defined as overconfidence, right? Because now you're starting to believe things about your own ability to predict the future, to predict outcomes that is just not real, even as much as today, is going to be a great day, right? That's overconfident. You're not a psychic. You cannot make that kind of prediction. So, being able to recognize the overconfidence, building, much like I mentioned earlier, in the kind of that mapping process, is vital, and it can take a little bit of work to see it for yourself, but. Overconfidence is a big one. But let's say that the large losses happened, 3 months or longer ago. Then we kind of put it into the category of scar tissue, right? Trauma. And there's a little bit of a different kind of calculus there. Yes, you could, if it's like kind of a singular event, do exactly what I just said, you know, go back to whenever it happened and really try to learn and understand why it happened. But sometimes these things kind of hang around in the background of our mind, even though we may have made some distinct corrections, and not being able to like firmly understand like what's still holding you back needs to get worked through. It's kind of like scar tissue in your muscles. Like you need a massage therapist to really kind of work through it. Now, the protocol that I've developed for this is like an adaptation of the mental hand history that I described. And the second step to that is really vital. So the first step is to describe the problem. And in this case, describe the memory, describe the loss in as brutally precise detail as you can. Don't just say, oh, you know, shorted NVIDIA, you know, 4 years ago, right? You know, really describe the details of what was going on in your life, trading, how much the money was, how it mattered. Second step, why does it make sense that you are still holding on to that loss? Right? And by trying to articulate that, it can be challenging. It's a very hard question for some people to ask that have been trying to block this thing out for most of the time. That question can start to open your mind a little bit. And the answer always is, there's something for you to learn. You just don't know what it is yet. And once you learn it, I'm not saying that all that emotion is going to go away, but you now have some bit of logic that you can be deploying into those moments where you're having that reflex to kind of shy away from getting punched in the face, you know, entering the market, feeling like you've got some strength. Like you now have something you can use to kind of push yourself through that fear, through that hesitation, to rebuild some confidence and motivation.
I love that. And I think hopefully a lot of people are going to take away so much from today's podcast. And you know, it was interesting. I've been trying something new with our guest recently in terms of doing like a motivational speech, but I feel like that would be disrespectful to you. So instead, what I'll ask you to do is you know, down your lens just here, your camera right here, just give 30 to 60 seconds max your, you know, sort of thoughts or, you know, lesson or message to traders out there for them to progress.
I'll say this. This work is not easy, but it is doable. You know, and just like being in the gym, the biggest gains come when your muscles are burning, right? When you give up when things are easy and still kind of comfortable, you don't really gain much, right? The gains come from pushing yourself when it is hard. And when you do that, there is real transformation that is out there, right? You can truly not just perform at other levels, but become a person that you can look in the mirror and be proud of. Not even just because of the outcomes that it produces, but because you know that you have actually progressed. You have actually improved in ways that nobody can take from you. Whether you win or lose, whether you make it in trading or not, you have a guaranteed opportunity to make real progress on the mental and emotional side of this game. And that always de-risks the amount of time and effort that you're putting into this. Because I know it's hard, and I know you could have been spending years doing it. But when you can learn more about yourself, when you can learn skills that will transfer and help you in any aspect of life, and that's the beauty of trading. You can do that. You can learn things here that can help you everywhere. And then you've basically guaranteed that you're going to win.
I love that. Thank you. Well, Jared, again, thank you for coming here today and just giving us so much to think about, so much to actually take action on. And hopefully people do actually take action on it. That was the main theme for today. But everyone at home, thank you for tuning in. As always, make sure the links for Jared will be in the description below. So make sure you check that out. And make sure you get yourself a copy of The Mental Game of Trading. But yeah, drop a comment with your biggest takeaway from today's episode. There'll be links and like playlists to other episodes right here. Make sure you hit subscribe. And until next time, everyone, take care.